Hello everyone, time for a market update. No time to waste, straight into it. Well, plenty of time to waste because we have absolutely no volatility on any time frame on the charts, which normally is what happens for an extended period of time before we get volatility. There is some excitement around Bold and some other coins coming out, but that's a whole different topic entirely. I did a post the other day. In the bear market, the big red candles are not the hardest part by any means. Those are at least exciting. You can make some money. They're painful to see your long-term bags go down, but there's stuff to trade and there's things to learn and there's new news coming out every day. The real challenge of the bear market is the boredom. Times like this where price is just going sideways. Really not much happening, tiny amounts of volatility for weeks on end. But this is when you have time to accumulate really good investments, to go network, meet people. Because if you're networking right now, there's not that much attention coming into the space. People know you're more likely to be a builder and not just a tourist coming in for a quick cash grab. Finally, you have time to learn to trade. You have time to get experience in market conditions where there aren't that many opportunities. So you can make all your mistakes and you can not be good while it doesn't cost a lot to not be good, because every week in a bull market is like a month in the bear market. Anyway, subscribe to the channel if you guys are playing the long game. Follow me on Twitter. I'm not going anywhere. I have bet on this industry. So let's talk about our trading bets now. You guys know I've been in a short for a while and I'll break that down. Start with the weekly. We've got the 100-week moving average and the 30-week moving average. These are the key levels I'm watching on the weekly chart. And then two levels I'm watching as we're coming down to this 30. You can see the 27.2K level. That's confluent with the 30 moving average over here. If you see as we slowly make our way down, this is going to slowly make its way up and they'll probably meet around there. Then we've got before that this 28.5K level, which you can see some significance on the higher time frame over here, where it acted as resistance there and now is likely to act as support. You'll get a clearer picture on the 1 day. As you can see, we are similarly under the 30-day moving average and I believe heading towards the 100-day moving average. So my bet remains that price will head down towards this 28.5K level. I could be completely wrong, but that doesn't matter. We're not trying to be right every time. We're trying to make money over time. Market structure also looks very bearish and indicates most likely that we continue downwards. Similarly here, slow bleed, sideways, a few wicks to try catch your stop losses, and that's what I do expect will happen. Even if we do continue going down, I am expecting to see some ugly wicks going up, making people think it's about to reverse, and more importantly, hitting stop losses, because I'm not the only person that's seen this clear market structure. Shorts start to build in this area and stops will be up here in this region where price will like to go before going down to cause maximum pain. This is why trading the short side tends to be a lot more difficult. You get less clean moves down and you tend to get a lot more choppy moves down, slow bleed, sideways action. They try to bore you to death. I mean, just take a look at this move down here. So the move down, it kind of comes down, goes back up, comes down, goes back up, comes down, goes sideways for a bit, goes up. Like anyone who got into a short here would have been stopped down on the way up here. Then it comes back down. Okay, you re-enter your shorts going well, then boom, big candle goes up, comes back down. So even if you entered a short here and you were targeting here, two huge opportunities to stop you out of those trades, versus just taking a look at our beautiful bullish moves. Ooh, straight line up, some sideways action, straight line up. That's why trading the long side is generally a lot better for newer traders. And what I teach my students is if you're completely new and you don't have your first strategy yet, only trade longs. Never do this thing, which I see a lot of people do, is they come up with an idea for a trading system, say buy support, sell resistance, and they try to trade the same strategy, long and short side. The market moves differently up and down. You can't just have alternating long and short for the same setups. Always have your long base setups and your short base setups as separate strategies with separate data. And finally, I will zoom in onto the 4 hour, where the other way you could be trading this right now is trying to catch a lower time frame break out or break up. So just get rid of moving averages here because they are distracting. So you set yourself your upper and lower bounds. So upper bound right now would be around here, about 29.5. And you can set your lower bound round about here, 29K level. And you can try catch yourself a break up or break down at these two levels. That's how I'd be trading the lower time frames. No BS. as much alpha as I can put in one video. And if you want to learn to trade, link to my Telegram in the description below. This is the #1 free resource on the internet to learn to trade. Tons and tons of tutorials, organized, structured, PDFs, learning materials. Go check it out.